280E, how do banks feel about 280E? Well, yeah, let's talk about that.
Okay. So very simple explanation first. For anyone that doesn't know, 280E says that as a plant touching business, you can only deduct costs of goods sold. So what does that mean in a practical sense? Well, Amazon last year, their effective tax rate was roughly 5% after taxes. I'm sorry, profit. Sorry, their taxable effective tax rate was roughly 5% of bottom line number. Your typical business is probably paying 20 to 30% of top line number.
Okay.
That's a huge difference, right? That means your effective tax rate is something like 60%, 70%. What does the bank think about that? Obviously they don't. It doesn't affect the bank per se, except for the fact that from a lending perspective, financing the company, these companies are not making as much money. The bottom line number, your profitability. And in fact, I don't know if you saw recently, Whitney Economics published a report saying that less than 50% of cannabis companies in America are profitable,
I did.
truly profitable on the bottom line number. So if you have a lending institution, if your bank or credit union is a cash flow lender, as they say, and what they look at is profitability, your bottom line number, which certainly is a normal school of thought, right? Depending on which school the lender went to, you'll either look at cash flow, the top line number, or you'll look at the bottom line number.
Mhm.
And again, a reasonable metric. If you were to look at a profitability, well, half of that means that half of the cannabis companies in America are not creditable, are not bankable. So that's where banks and credit unions come in as far as 280E. The taxes does not necessarily affect how the bank views you, except from a lending perspective.